MongoDB reported earnings last week and the stock cratered 27%. Shares are now down 54% over the past year. At the recent price, MongoDB now has a market value of $15.9 billion. The company has a solid balance sheet with $2.3 billion of cash and no debt, so the enterprise value is $13.6 billion. Meanwhile, MongoDB has reported $2 billion of revenue over the past 12 months, $1.5 billion of gross profit, and $115 million of free cash flow. However, the company is not yet GAAP profitable due to a large amount of stock-based compensation, almost $500 million. The global database market is perhaps the largest in software, but is currently dominated by legacy products that are not equipped for today's applications. MongoDB offers a flexible modern platform that can handle structured and unstructured data in the cloud, and the product is clearly valuable since MongoDB has more than 10x'd its annual revenues over the last 7 years. However, shares collapsed on Thursday due to weak forward guidance. Revenue is forecast to grow only 12 to 14% this year, a significant slowdown. After all, Mongo grew 19% last year, 31% the year before, and 47% the year before that. In addition to slower growth, the company is forecasting lower profitability. Adjusted operating margins are expected to drop 5 percentage points to 10% this year, as the company intends to increase spending on R&D and marketing. That will put pressure on the company's already slim cash flow margins, currently sitting at only 6% of sales. Part of the problem is awareness. MongoDB is trying to solve a difficult problem by getting large enterprises to upgrade their legacy systems, but the company is struggling to get its name out to developers, and enterprises are slow to change. Competition also comes from the hyperscalers. Management is optimistic in its investments and thinks that fiscal 2026 will be a transition year, with top-line growth eventually returning to 20% a year, helped by recent investments in AI. The problem is that MongoDB is now 7 years into its journey as a public company and is still not producing any meaningful profits. Shareholders will rightly question how much longer they must wait, and the investment case is made harder by the huge amounts of stock-based compensation. For example, a simple discounted cash flow model that assumes 15% revenue growth for the next 10 years, with free cash flow margins gradually getting to 25% by year 5, suggests a fair value around $221 a share. However, account for stock-based compensation and that fair value drops to $152, suggesting a downside of 19%. In other words, MongoDB stock isn't cheap. Profits are still years away, and it's going to be a while before the company can present an attractive narrative for investors. But these are my personal opinions, not financial advice, and I hold no position in MongoDB. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.